How are we all today? Keith at Crypto Bullseye, and I've been asked from a couple of guys in the community. That's Benton and that's James to cover Casper. That's CSPR. And it's actually interesting, James and Benton, because we're forming a bull pennant right now as we speak. Bull pennants have got a higher probability of a move to the upside. But one thing that you can do with bull pennants, you can play the break with ease and give yourself higher conviction of if you're right, with the higher probability that you are right, you can protect yourself below the previous low. And then the opposite applies for the short. So a couple of conditions that I need to be met on here. Let's analyze this together. So how would you play a bull pennant on Casper? How would you play a bull pennant on any different cryptocurrency or any asset that you're looking to trade? And what's the psychology behind a bull pennant? Because what we've had here, and this is the important thing, this is the signal, is this pole to the upside. Now, this gives us an indication of a few things. The first thing was we'd taken out these previous highs from this long accumulation phase. And once you break out of a high from a long accumulation phase, it does one thing. Tells a story that the bears, which had control for this whole period, have now lost control completely. And then it gives an indication of another thing, that the bulls that have been holding off for this period have now got conviction. So one thing that you'll see, guys, is the smart people that were bears down here will then flip bullish. And then what will happen then is there'll be more bulls than bears. And the bears that are there still will be cooling off and cooling off and cooling off. So you'll see one thing. There's more liquidity going into the buy orders than the sell orders. And that's the conviction behind this flagpole here. So it's done one thing and it's done another thing as well, guys, which is a strong thing. It's broken the 200 daily moving average. It's managed to stay above the 200 daily moving average. And now we're forming this pennant. So a bull pennant's got a higher probability that you're going to break to the upside. If it was flipped in reverse and it was the bear pennant, you'd have a higher probability of a move to the downside. So how can we play these things? Easy, easy, easy. You've got your trend line on there. We're going to talk about a couple of metrics here. You've got your trend line. We'll add our trend line on there. This is going to form the pennant. That's going to form the pennant. This is going to be our indication as to who's going to win control here, because this is the tug of war battle. This is the tug of war battle. This is the indecision here. This is where the bears have got their final chance to push price action back below these previous resistance levels, which have now already flipped support. So the bears have got their final chance here. Once the bears lose here, you'll get the acceleration to the upside and the bears will completely lay off. Some of the bears will become bulls. Buyers will become more dominant and then the price will start going up. So the tug of war battle happens here. The tug of war battle happens here. And how can you catch the tug of war? How can you flow with the money? We're looking for the break. We're either breaking to the upside or breaking to the downside. And we've got an elephant in the room here, which is this, the 200 daily moving average. Above the 200 daily moving average is bullish. Below the 200 daily average is bearish. And you can see how we've had a reaction, which is pushed price down, pushed price down, pushed price down, pushed price down. Every single candle has pushed price down. So this is going to be the first indication as to when the bulls have regained control within this pennant. The real indication is going to be the break, the retest, this previous resistance here to act as confirmation support, and then a move to the upside and a trend continuation. So you looking at clues in the market, and you can look at individual candlesticks as well. Once we break above 0.01699, that's when the bulls have regained control in the short term. The price is currently 0.01591. We're not far from there, and all it's going to take is just one candle with strength from the bulls, push price up above here, bulls regain control, come in tomorrow's session, the bears will have another chance, and if they can't push price below the 200 daily moving average, the next day you're expecting a break, or you've got a higher probability of a break. And that would be putting in higher highs and higher highs and higher highs. You can see with the pennants, you're putting in lower highs. The bears have got their turn here. The bears need another turn as well. So the bulls have got momentum there in the short term. We've got previous resistance to act as support that you would expect if we were wrong to come back and flip as support down here. You can see this accumulation period for such a long period of time. That's at 0.01409. Okay, so if we get rid of this, how do you play these things? What I'm going to do is I'm going to go into the 4-hour chart. That was the higher time frame. We're going to go into the 4-hour chart and get a clearer picture now. Each one of these candlesticks is 4 hours rather than the 1 day. You can see we're hitting support, we're hitting support, we're hitting support, we're hitting support. So from a conservative perspective, if you're allocating a small amount of your position, these levels here, these levels here, these levels here, what you're doing is you're just averaging your position out, because what you want to be, if you're wrong, and this comes down here, you've only got a small allocation of your position, you've protected yourself below the low. That means you're out with the least amount of capital at risk. If you continue the way that we're doing, you can allocate, continue the way you're doing, allocate, continue the way that you're doing, allocate. If you get the big break, that's how you take the biggest advantage from these trades. Then you're always putting your stops below the previous low, stops below the previous low. And if you're wrong and it breaks down to the downside, which there's less probability because we've got the flagpole to the upside, then you want to be wrong with the least amount of capital. You can build and build and build. And by the time you're down here, you've taken out that previous low, you're wrong. Now, what's the problem with that? Here's one problem, guys. Sometimes you will get fake outs. Sometimes you'll get fake outs. And what a fake out looks like is something like this, where you're going to bounce and you might build here. That might be a third position, your fourth position. And then bam, to the downside, back to the upside. That's support. And a lot of the time that you will find that, guys, especially on the lower time frames, that happens quite often. So unfortunately, you cannot prepare yourself for that. You would be risking your capital from this previous low. You'd be out. However, if you did catch it, if you've got notifications on or whatever, guys, this is not me. This is just me telling you risk management techniques, how you can play different patterns. If you've got alerts on that's telling you you're out here and you see a reversal candle that comes back in and then starts breaking trend, then you can get the second one on the break and get the second one on the retest and then ride the continuation that way. Sometimes it doesn't happen, guys. Sometimes it does happen. You just need to prepare for that. But that's how you can take advantage of these pennants. So let me just go out, zoom back into the daily, and we'll look at what next resistance levels we've got. You've got this resistance level here, and this is what we're hitting now, 0.02295. You can see we had the reaction from there. That's acted as resistance. Once we get a continuation and we've held the 200 daily moving average, this is the area that we need to take out. This is the kill zone. You work out the kill zone from one way, from the previous swing low to the previous swing high. You'd expect that to act as some form of resistance. You pull this. The deeper that we come into this, that's the closer that you get into the previous high, and that's showing weakness for the bears. The bears want to push it as far down as possible. When the bulls can push price all the way up to the previous high, that's given conviction that the bulls have regained momentum, and we can try and take out this level. When's trend reversal confirmation? This level here, the top of this, the kill zone. Once we've got a break, and the close is important, guys. We had this rejection wick here. Close is important. Once you get the close above, that's given confirmation that that high is taken out. Once that high is taken out, that means the trend's reversed because you put in a higher high. Then you're expected to put in higher lows and a continuation. That's how I'd play the Casper trade, guys. Hope you found it useful. Let me know in the comments what you want me to cover next. Join the Discord group and have a say in what videos that I'll be doing in the future. And I'll see you in the next one.